Hi, welcome back, folks. In today's video, we're going to be talking about where to place your limit orders and strategies. No strategies 100%, okay? Do me a favor and help others find this video. Hit the like and subscribe button. If you're not a subscriber, go ahead and subscribe now. Go ahead, subscribe now. I'll wait. Stop being like others and subscribe. I'm waiting for you to subscribe so I can get started teaching. Go ahead, subscribe and like. Help others like you find this channel. It's free. All right, so we're going to talk about placing limit orders, where to place them, and why you're going to place them there in this video. This is where it all comes together, and you need to practice this before you use live money. So in this video, I'm going to teach you briefly about limit orders. The most important thing about limit orders is where you should place them, and if price moves according to the market analysis. Keep in mind that strategy is not 100%, but when you're right about your higher time frame analysis, your key levels, you can expect price to move in that direction. And there are times when, as a trader, you have to be patient and you have to step away from the charts and allow price to agree with you and come to you, let the setup come to you. That's why you will want to place a limit order. So you can take action, get involved, and trade once you have your limit orders placed in the right locations. And there will be times where you miss it and you just have to wait for the next trade setup, or sometimes even the next day, depending upon your trading style. So do me a favor, hit the like button and subscribe if you haven't done that already. Are you ready to learn this? Well, as I said, are you ready to learn this? Well, welcome to my world, Planet. Let me help you better understand and teach you beyond this lesson. You need to be a subscriber if you really want to take advantage of all the content that I put out there. And I thank you that much for that right now. So in the previous videos, we talked about fair value gaps, order blocks, supply and demand zones, liquidity sweeps, and hidden areas where price is engineered to move. And it's not theory, it's how institutions move the market. So let's stay focused on that in this series. If you watch the other two videos, please go back and watch them again. Trading the market for high probability trade setups is really important. So I'm going to begin here on this chart. I'm not sure what you noticed, but right away I noticed your swing highs, your swing lows. So you always want to mark out those areas on a higher time frame. This particular time frame we're on the 4-hour time frame. So it's typically a good time frame to begin your analysis on, because everything else in the lower time frame is going to be kind of anchored toward the higher time frame. I also put here something called value balance. Let me get rid of some of the stuff on the chart because I'm going to itemize it to you. I'll get rid of some of that, and I'll just mark it back up as you can see. So again, we're going to begin at the top. We see we have relatively equal highs. That's what you're going to be looking for, because this is an area where liquidity is on the top of those relatively equal highs. Because there's buy stop, people are going to close their order once they reach that, and that's where the liquidity is. There's also liquidity in this bottom area with all these wicks down here. Is this thing going to work? There we go. With all this wicks down here, there's orders down here as well. I'm going to make this a little bit bigger zone, because below all these wicks, traders have their stops. Okay. Now we're going to go down to a lower time frame, and I'm going to identify some other areas for you. It's very important. In trading, trading the market is about, really, when you make a decision for a trade setup, it needs to be a high probability trade setup. Limit the risk limit your risk. It's not about guessing or hoping, more about trading that works more often than not. And trading is more about being prepared for any market move, protecting your money at all times, like a boxer in the ring. When the referee tells the fighter to protect yourself at all times, using a stop loss is that same philosophy, protecting yourself at all times. So what the referee is really trying to say to you, don't allow yourself to be positioned or knocked out, right? And if that means your account, you might take a hit, right, and lose it with a little draw limit or something like that, but you'll be able to recover. So in trading means the same thing. And when you practice and drill until you're stronger, more confident in your trade decisions and your trading strategies, you need to be aware where the liquidity is and the likelihood where price might turn. So as a boxer, you need to study and train for the next fight. Professional traders are the same way. They need to train to see different patterns in the market and ready to respond with a different limit order. Professional traders know when to jab and when to move in the market and when where to place their limit orders and at the right place where the liquidity zones or areas. And just in case it requires a response, you can benefit and get paid out. So we know we have liquidity up here. We have buy side liquidity. We have sell side liquidity there. Another area of liquidity that a lot of people don't teach, and you'll find this in smart money concepts, liquidity voids. You'll find this on, a lot of different things. But here is another area of liquidity, and it's used and found in trend lines. Trend line is basically what it is. It tells you how the trend is moving. And typically that you're taught, if it touches the trend line, guess what? There's liquidity there. But you have to also look at where is it touching. Because if you realize you start to analyze this, guess what? You see all these orders down here? That's why it's a good area for liquidity, because there's stops here. It's not per se the line, but if you look at price action and this market structure, you see that's a minor support area. What's there? Well, sell stops are there. People put their orders there. Look at this touch right here, and then you'll see and discover this right here. Guess what? There's liquidity there. Here's an order block. And there's a fair value gap. Those two combined. We see a liquidity void right here. And liquidity voids are good areas because price typically comes back to retest that area or to fill that gap. So in my market analysis for the beginning of the week, I'm looking for shorts. Why? Because the liquidity's been taken here already. Why? Because liquidity's been taken here already. And we see an inefficiency down here. And price is going to gravitate to that area like a magnet until it fills that area. So I would be doing this in this trade when the market opens. I'll be making a short order with an order something like that. And then I'm out of the trade. Now you have to understand where the liquidity is, and this is where you put your limit order. The market's not open right now, but when the market does open, my mindset is I will put a limit order. I think I have the template already. Do I have that template already? You know what? I'm not going to waste that time. I'll just do it like this. Tenants. Sell. Limit. Order here. And since it's a sell, let's go ahead and just make it there. Get a little bit bigger. Then I'm gonna, just in case I didn't save this template, I'm gonna just create a second one and have it ready for the next trade setup. I did have one there, okay. I know I had one. So that's where liquidity will be laid. And that's where you want to put a limit order. So now you can choose to do that or not. It's completely up to you. By the way, if you haven't subscribed, please go ahead and take advantage of this content. Now, Top-Down Traders is a great place to learn, a great channel to support. What we teach here is at Top-Down Traders is specifically geared towards the NASDAQ minis. So that's all I trade on a regular basis. And I want you to get familiar with where you want to put your limit orders. And here's where the stop would be, and there's where your take profit would be. It's really that simple. Now, another area I will be watching is this area here, because it may just bounce. Because this level over here, liquidity was taken by this candle. It looks like it's going to return, and that might go down here and bounce back up. Who knows what the price is going to do? But it's a strong probability that this price is going to continue lower. And it's really confirmed by higher time frame buys. You see that bear circle from candle? Come back to retest that support, fill in that gap, and then can possibly continue higher. So a short-term pullback is the type of trade I would be trading right now. And if you haven't learned things from my other videos, please go back and look at those. I talk about fair value gaps, order blocks, supply and demand zones, liquidity sweeps, and right now in this video, I'm giving you the hidden area that price really is engineered to retest, and that's going to be retesting these zones, these areas. This might retest this trend line, capture this inefficiency, and then continue to push up higher. Or not. You just have to be monitoring your charts, get in and out of your trades. You only really need to do 1 or 2 trades a day. So, thank you for your time. If you got any information out of this video, please do me a favor and hit the like button. And if you're not a subscriber, go ahead and consider subscribing. You'll get access to content like this. And I wish you all the best. Until the next time, have a great day.